Howdy, folks. This is Darius Dale here to present our macro minute for Tuesday, March 29th, 2022. It's great to be back in the saddle with you. So, starting with markets, we have stocks up this morning, commodities mixed, crypto mixed, dollar down, global bond yields up. Big news this morning we have Ukraine and Russia striving for ceasefire talks that began today in Turkey. Those talks have a minimum goal of improving the improvement on the humanitarian front. As you recall, Russia has bombed some civilian targets and have really threatened some of the evacuation routes out of some of the more beleaguered cities. So hopefully we get some improvement there, more improvement, and obviously markets are responding very positively to that. We continue to have signs of strategic splits emerging within NATO's ranks. France, Germany, Italy, all incrementally open to dialogue this morning. While obviously President Biden's most recent remarks, UK, Poland, most Central and Eastern European nations continue to be extremely skeptical of Putin's intentions there. So as long as we continue to have those divisions emerging within NATO, it's very unlikely that things get worse from a geopolitical perspective in terms of the West response, in terms of sanctions and things of that nature. So that again on the margin is positive for the markets. With respect to big movers today, you have Germany's DAX index up a full 2%. The 10-year Bund yield up 11 basis points to 0.68%. That's been driven by the repricing of European policy rate expectations. We have 1 year, 1 month overnight index swap forwards up 11 basis points to 0.85% there in terms of euro swaps. On the macro front, we have the latest consumer confidence data out of Europe are marginally confirming of the pending slowdown in consumer spending across the pond. As previously discussed, the inflation shock to Europe has been more significant than any other region in the world. So we got Germany's GfK consumer confidence index came out. That's minus 15.5 in the month of March here. That's the lowest point we've seen since June of 20. France's consumer confidence number came ticked down to 91. That's the lowest point we've seen since November 20 as well. So taking the consumer confidence readings down to multi-year lows here in Europe, the inflation dynamics there. Taking it to the chart, what I'm showing in this chart in the upper panel here is the city inflation surprise index for the U.S. That's the blue line. The European city inflation surprise index for the Eurozone. That's the red line there. As you can see, the U.S. has been kind of hodling around its all-time high, really since going back to July of last year. But as you can see in surprise terms, the inflation surprise in Europe has been significantly more pronounced than what we've seen in the U.S. economy. And as a function of that, we've seen a more statistically significant rise in bond yields relative to Treasury yields. We got a 4.7 sigma move on a trailing 3-year basis in 10-year German Bund yields relative to the 2 sigma move we've got into your Treasury yields. And so this is something that just in terms of the bond market's response in Europe, the surprise and momentum and inflation pressure in Europe has obviously been something that's catalyzed a lot of pain across fixed income markets across the world. We would expect that to wane as we progress throughout the year and inflation comes down, but that's something that we expect to wane in a material basis over the near term. So this is going to continue to be a problem. With respect to today's probable range setups, still bearish FAMS S&P 500, but it still looks like it's trying to transition to at least a neutral VAM state. But bearish FAMS for now. We'll see if we get that change, that transition later this week with 9.6% of downside in its probable range, and it's at the upper boundary of its probable range this morning. WTI still a fair fight there. Neutral VAMs minus 16% of downside versus 15% of upside. Bloomberg Dollar Index still bullish VAMs minus 0.5% of downside versus 1.6% of upside. 10-year Treasury yield bullish VAM still minus 38 basis points of downside versus 7 basis points of upside in this probable range. Bitcoin and Ethereum still similar setups as the S&P. Both look like they want to break out from a bearish VAM state. Both are probing the upper boundary of their probable ranges, with Bitcoin's got 16% of downside and Ethereum's 20% of downside as well. So we'll continue to see. We expect if we do continue to see the same type of price action we've seen over the last week or two in the S&P, in Bitcoin, Ethereum, and a lot of risk assets, you're going to at least start to see some transitions to neutral VAMs, especially if these ceasefire talks in Russia and Ukraine are actually what we expect and what the markets hope they can be over the near term. And then lastly, gold, neutral VAM still minus 2% of downside versus 6% of upside in its probable range. So with that, Darius Dale presenting our macro minute for Tuesday, March 29th, 2022. Best of luck out there today.